good morning. First of all, thank you very much for having me here, and hopefully I can speak something that can add some value to your morning breakfast. I think the topic today is scalability. So, as Phil gave such a kind introduction, scalability is something that has its pros and cons, right? And most of you guys are, small business or big business owners. So you would know that, people ask like, how do you scale? How are you able to scale so fast? And really, I would say it just comes down to one single thing, right? When you're looking to scale it, and that one thing is it's that belief you have within you or inside you, in the vision you have, that you have this, you're convinced in your ability that you will take your business to a certain level. And when you envision yourself being there, scalability just comes natural, right? So for example, when I first started the business, in 2013, we bought our first. I had just left my job, so I graduated in 2003, and I worked 10 years, and finally was able to, take that leap of faith and take that plunge and start the business, right? So the first asset we bought was a very small, $1.3 million asset that we bought in Dallas, and it was a 37-unit apartment complex. So really, that asset wasn't really big enough for me, to take care of my family and leave my job and do this full time. At that time, I decided and I chose that in order for me to be able to get where I am, I have to scale the business. And what I might mean by scaling for me at that time was having time personally to spend where I need to spend to make the most difference, right? So we bought the first couple of assets. We bought 3 assets, 37-unit apartment complex in Dallas, and we bought the next one in November 2013. It was a 76-unit apartment complex. The next one we bought was a 160-unit apartment complex. So really, for the first, I would say 6 to 9 months, I didn't have this consciousness or awareness that I need to do this to scale it. And by scaling it, I experienced it and I made that decision much quicker. So the first 9 months, I basically was raising the equity. I was trying to find the lenders. Well, initially I was trying to find acquisition opportunities, trying to convince the brokers that why we are better buyers than anyone else. And obviously we didn't have any track record. So there's a lot of other buyers that are in the market, have much better pedigree and much more source of capital than we did. But to be able to convince the brokers that we are the right buyers, we will close at the right price on time. And then, from there on, finding the equity, getting the debt, and then the assets that we already owned at the time, so those 3 assets, I was sitting there being the, acting as a manager, trying to collect the rent from these tenants. And at the same time, I was also, drafting company agreements, making monthly financial statements, right? So literally I was doing what a lawyer, an accountant, a capital raiser, really an operator would be doing all in one. And I quickly realized that, in order for me to be able to get the vision I had, get to where I need to get, I need to have other people doing this part of the job that I'm doing so that I can spend my time which makes the most difference or which will make the most impact, right? So really in March or April 2014, I had this realization that, okay, I really couldn't think about, the earnings I'm making today, right? Because those earnings were irrelevant. What those earnings gave me was basically ammunition or dry powder to go out and hire people, right? So at that time, I said, okay, I need a good manager. I need somebody who has knowledge of legal, of the documents. I need somebody who's an accountant. and I need somebody who to do some of the other aspects of the business that it's more tedious for me. It takes a lot of my time, but it does not result in what I expect to come out of it, right? So after making those adjustments, after saying, okay, I have this pool of $100,000, then I need to hire 5 people with, right? Obviously, you and I standing there is like, how are we going to hire that many people with this much pool? The thing is that, again, going back to why you originally started the business, right? Was your original business to make profit? Was your original business to have a bigger purpose, right? For me, the bigger purpose was to improve people's living conditions, right? So when you're starting a business, if you have a bigger purpose and you have a vision, you will basically make things happen to support that view, right? So you might get distracted, you might get greedy in the time being that, hey, I'm happy with 3 assets, I'm happy with 4 assets, and I'm making enough money that I'm doing better than when I was working in a job. So I'm happy with my, where I am, status quo. And a lot of people take that route, and there's nothing wrong with it, right? The approach I had is I wanted to be one day be able to be the largest real estate operator in the world, right? I wanted to compete with Blackstone. I wanted to grow really fast. And what that meant in the time being was that in order for me to get there, because obviously I didn't come from a lot of wealth, I didn't come from a family, I wasn't backed institutionally. It was me undertaking and really starting this business from scratch. And an idea I had, right? I grew up in these communities. I grew up in, you could call it Class B and Class C apartment complexes, where, you really had, my thesis at that time was that there is a lot of migration, there's a lot of population growth that was happening in Houston or Texas and some of these Sunbelt states. So we had a lot of tailwinds, or there's a big demographic story. Obviously, in that moment of time, when you had this idea, you have this vision, you feel you have a business that has legs. But keep in mind, during that time, while you have these visions and idea, you are being distracted on daily basis by advisors, your friends, people who've done it, who've invested in this business before. And I'm just taking my business as an example, right? Could apply to any business. So when I bought these assets, I had a lot of owners who owned these assets for a while. And at that time, it was a very mom and pop dominated business. A lot of individual owners. And they basically said, look, this price, and there were a lot of distractions. The timing isn't right. These are too expensive. Because obviously when people have seen the down cycle, they're like, well, this is still too expensive. But when you have that unwavering, I would say, passion or unwavering conviction that this is where I need to get, this is where I'm going to get, this is how I'm going to get there, a lot of the hows and whys get removed automatically. And I know it sounds like a cliche because people are wondering, how are you able to do it? Because really in that moment of time, I have $100,000. I have to hire 5 people to manage different aspects of my business. In a normal world, you would say that's not possible, right? But then, again, because of my bigger purpose, because of where I wanted to get, I started approaching my ex-colleagues. I started approaching my friends for a long time. I started approaching, LinkedIn. I started posting on LinkedIn about, I have a job position opening for an auditor, for a bookkeeper and whatnot. And you'll be surprised that when you have that when you have the unwavering conviction, a lot of people just want to get associated with you. So, the first 5 people I hired were comprised of my ex-colleagues, my friends for a long time. And they came on board taking huge pay cuts, taking on, they risk their livelihood in terms of how they will be able to support their family based on the vision I had, right? So again, going back to this point about having this unwavering conviction about this is how I'm going to get. So now I had 100,000 to spare. I spent the 100,000. Now, okay, how do you scale further from there, right? Again, it comes down to making investments too, right? So if you start thinking about, okay, well, if I hire this many people, or this is how much I grow, this is how much investment it's going to take, you've already lost the battle, right? You just can't think about the investment you're making. You can't think about the risk you're taking, because at the end of the day, it is very risky. It is very risky because for me, as an example, when I started to scale in 2014, I didn't know what the market cycle is going to be. You know, oil had just hit $30, $40. This is one of the lowest prices it had in the last 10 years. I didn't know how the market will be. If I was able to scale, what will be the final outcome? I still don't know that, right? I still don't know how I will be able to monetize, right? If you are thinking of a lot of these questions, like if I do scale, this is where I end up being, this is how my valuation is going to get, this is how I'm going to be able to monetize it. I think that's a wrong approach to take. I think it's almost like I say, when you decide to scale, you're almost basically taking, it's like a blind faith. You're basically scaling a business to get to an end, which you haven't seen that end, but you have a vision in your mind that this is how the end looks like, but it might not ever get there. And then all of a sudden, the time, money, the resources that you spent to scale this business from zero to wherever you're there, it might not mean for anything, right? So that's one of the cons I would say of scalability is when you're scaling, you're really not putting a lot of thought behind, you're really plugging the holes without realizing that there might be overlap in the responsibilities of that position. The structure is very loose. And all of that comes with this fast growth as you experience, right? If it's a more thought out, see, if you're really trying to scale, a well thought out approach in my mind really usually won't work. Because if you're really trying to have a well thought out approach, in no logical sense you will make the moves that you will make if you were just blindly trying to scale the business, right? So in my case, I would admit that I was blindly trying to scale the business to get to a place where I had in my mind where I wanted to get to. I wanted to be the best real estate operator in the country, right? And at the same time, I wanted to improve people's living conditions. So a lot of times during this journey, you will face a lot of naysayers, a lot of distractions. You will doubt your own. Like in my case, I mean, there's not a day that goes by where I don't question my own move, or I'm not, there's moments where I'm sure like, was it worth it all? Is it worth it all to scale it and to get to where you are? Because end of the day, once you get there, or when you really, the problem with this scalability is you never really get to where you want to be because it's always in your mind. When you get to a certain place, you're again thinking of the next step, right? That's the downfall of people who are really scaling and who are really aggressive growth plans. Because once you get to where you want to get, in your mind, you're still not there yet because your goalpost has changed, right? So making sure that once you get to a certain hurdle, stepping back and acknowledging and be grateful and taking the lessons learned, right? Obviously, as an entrepreneur, we are the last ones who will admit our own mistakes, right? We'll probably lie to ourselves. Even when we're journaling, you'll probably lie to yourself, right? Which is crazy to think about. You're a journalist for yourself, and you still try to fight your own thoughts and say, no, this is the way I'm thinking about it, but really the case might not be the way. So making sure that you really look down and acknowledge yourself, the right moves you've made, the moves that you made that were wrong, and how you can improve on it, right? I mean, that's a very difficult path because most of the time we don't want to admit our own mistakes. At least I don't, right? Even in my own mind, I say, no, I had this reason to do it. And then the fine line is once you've acknowledged that the moves you've made, where you failed, where you could have taken the right decision or a better decision, you can't let it affect you either, right? There's always a plan why certain things happen, right? In this growth phase or in this phase of scalability, you'll tend to ignore a lot of things that a lot of established business acknowledge, right? You will tend to ignore a lot of the details behind, you will tend to move past or much faster. If there's a problem, you try to look past beyond it. And really, when you come back and you say that is the phase where I should have been more careful or you should have accumulated a team better, you have to be truly honest with yourself and make sure that when you get there, you don't question the things that has happened, right? So for example, you might have had various lawsuits, you might be behind on a lot of these payments. there's a structure in place when you're scaling this fast. You have to be aware that not everything is going to be perfect. Not everything that you're doing, whether it's accounting, finance, acquisitions, whatever aspects of your business you're trying to accomplish, not everything is going to be perfect, and you have to be at peace with that, right? If you're saying that I'm going to scale really fast, I'm going to grow really fast, and then 2 years later you look back, okay, well, I have grown really good. I have gone from 0 to 3 billion in assets in 5 years, and I have a team that's 800 employees strong. But as an entrepreneur, as a business owner, you'll always find the holes. You'll always look for the things that are wrong with your business. The point being that don't let those things bring you down, right? Because you have to acknowledge and appreciate that how fast you've grown. Not every aspect of the business will be perfect. Not everything that you've undertaken, not every acquisition you make would be the right acquisition, but it's all part of the process, right? That's how you learn. See, there's two ways to growing the business. There's fast growth, aggressive approach, you scale and you move, and then the luck and timing has to matter out, right? In my case, from 2013 to now, it was a great time. It was one of the best economic cycles that we've seen in the last 100 plus years. So the thing being that once you grow and you grow fast, you don't look behind. The other approach is having a methodical, contemplative approach to growing, right? And that's the approach which again has its pros and cons, right? You could really contemplate and grow strategically, and in cases like those, you'll be better equipped to handle with uncertain situation right now, like where the market is, where the economic certainty future is. You will be better equipped to handle those situations if you grew strategically and contemplatively. But if you're able to grow fast, if you're able to grow, if your growth trajectory is something like ours, which was growing really fast without really putting a thought behind it, you have to, again, set yourself goalposts, hurdles, timelines to reflect back on the journey and try to take back from the learnings. Anyways, I'm by no means expert in this scalability issue, so I want to, again, make this conversation much more conversational and interactive. So if any time any of you have any questions, would definitely love to take that on. But other topic I would say in terms of scalability is it's also about your state of mind, right? When you're really growing that fast, there is not a lot of time that you have or you can dedicate to really step back and see, okay, is what I'm doing the right thing to do, right? And there's a lot of times when your mind will say that, your state of mind will be, you will be less convinced about your ideas, you say, why did I actually start doing this? You have to remind yourself of your original purpose. You have to remind yourself, and I know at that time it's really hard to remind yourself that why you started the business, why you decided to scale, but there was a reason for that. And if you write journals, if you write, that's one of the best ways to reflect back and go back and read some of the notes that you're taking at that time, because this journey has a lot of phases. It affects your mind in a different way. There are certain days, there are certain hours when you're really excited. There are certain times, literally after a text message or a phone call, you could feel completely different, right? This is the nature of the business we're in. We're all entrepreneurs. This is the risk we take, and this is one of the best things I've done in my life, and I wouldn't do it any other way, even though there's a lot of decisions that I've thought I could have done better. But every time you take a certain decision, there's a reason why you took that decision. It's because of the learning and the experience that comes along with it. Yes?
Do you have an exit strategy?
In terms of, when I started the business, right, I never really thought about an exit strategy, right? For me, it was always about how can I improve people's living conditions and how can I build one of the largest real estate firms in the country. So yes, there are times when I think about what could be my exit strategy, And there's plenty, right? Going public, listing the IPO, getting a big institutional private equity investor in. So there's many ways I think about an exit. But for me, really, where I am in my growth, in my journey is, for me, it's just, I'm really just getting started. So I really, to be honest, have not thought about an exit strategy yet.
You talked about two diverging paths. You said it's important to have a systematic, methodical approach. You also referenced how you sometimes can build the airplane in the air. If I were to poll your entire team, which one would they say that you generally gravitate towards? Having a plan or building the airplane in the air?
Yeah, latter. It's all in the mind. You create it in the mind and then you just hope you execute, right? People talk about, that person just got lucky, right? I have a whole thesis about luck too, because in my mind, really, I think about the outside world sees the external factors that affect you and your journey, and they call it luck, right? In my mind, as an entrepreneur, as an individual, as a businessman, I just have to expand my luck surface area. And then it's just much easier for me to get lucky, right? So the way I am is, for let's say a sale decision or an exit decision or a refinance decision, I usually make sure I have 3-4 different alternative paths, right? Working parallelly. And really, if 1, 2, 3 doesn't work out, the chances are one of the 4 or 5 usually does work out. And to an outside world, they might consider it getting lucky, which is true. But because I had expanded my luck surface area, the chances are I would be the one that should get lucky.
Can you talk about the challenges of raising capital when you were very small?
Yeah, I mean, same thing, right? It goes back to, when we bought our first asset. So we had to raise, $300,000 or so. So my approach was always, when it came to capital raising, was because I believed in my product, and I continue to believe in my product, I never really had to be too desperate for capital. And it's hard to describe, because you say, well, how did you raise capital? How did you know anyone? Who gave you the first check? Right? I mean, when you are able to describe your business plan in 5-10 minutes and be passionate, and the receiver can really feel that this person knows what he's doing. For me, that always has been the case, right? So started raising from friends and family. Obviously, they thought I was decently smart, so it was much easier to raise capital from there. It's not, they didn't have a lot of capital. These are $50,000 checks, $100,000 checks. From there to, build that investor base to what, 4,000 investors, it's always been about letting our actions talk better, more than words, right? We've never claimed that, this is the best place you can invest capital. All I tell my investors is, people is like, what makes you unique, right? A lot of people do what you do, buy assets, you rehab, you renovate, value add, you sell. What makes you unique? For me, really, what makes us unique is just thinking on behalf of our limited partners, right? Every decision that we take is in the best interest of our limited partners. And that means sometimes selling assets where we don't make any promote, we don't make any carried interest. But it's about the track record. It's about creating that trust and faith in these investors, because again, those investors refer their friends and family. So it's a whole chain effect, which is what we saw happening, right? One way we're unique is we're probably the only company in real estate world that have gotten here without an institutional backing, to be honest. Our company, 90% of our investors are high net worth accredited investors, right? They obviously, for them to keep reinvesting, they must have seen the track record. They've seen the integrity. So it's always about, people say that, it sounds like a cliche, be honest, be upfront. It's nothing more than, investors want to make sure that you're transparent. Investors want to make sure that you truly love what you're doing. You have a great team to support your idea. And I think before you start raising capital, you might say that I can do all of it, but why would an investor invest with you? But to be honest, you wouldn't know till you go through the process. When you started pitching and you have a business plan, when you go in front of the investors, they will figure it out pretty quickly that how good you are. And then if you're really passionate about your idea, you really have high level of conviction, raising capital becomes very easy.
Any more questions out there? Probably time for one more. Yeah, Russ.
So, I mean, you say that, but you obviously do a great job of selling your vision, right?
Selling, sorry?
Selling your vision.
Yes.
Because to your investors as well as you said, the employees came on to take that. How do you get people to see your vision so that they see the same thing that you see?
I support it with facts, right? So I read a lot. I am very passionate about economics. And so behind everything I say, usually I support that with facts. So when I'm buying an asset, for example, I have a pretty strong view, and that view doesn't have to be right, but I am pretty convinced, and I am usually the biggest shareholder and investor in my own assets. So there's a high alignment of interest as well, right? So investors know that this person is investing a substantial capital, and that I think is the key, right? When you're raising capital, it's a must that you are all in your own business or the asset, whatever you're buying, right? Because that shines through to anybody, right? And then supported with facts. I'll have a near-term plan, I have a medium-term plan, and a long-term plan, right? In medium term, I will be very specific about, well, you know, interest rates are high, might be negative cash leverage situation, but this is the reason why inflation will go down, why Fed will pivot, and why we will be back to, you know, within the next 12 to 18 months, right? Supported with facts, supported with a story. End of the day, being a good storyteller is such an underappreciated art, right? If you're a good storyteller and you know what you're talking about, you support it with facts, it's not that. It becomes quite easy for an investor or for your audience to really believe in your vision.
All right, last time.
Really quick, I would just like to say, I see what you're doing around the world, and I just wanted to tell you thank you for what you're doing for the greater good.
Thank you, I appreciate it.
There's one question about. Oh. So just wondering, these assets that you purchase have to be refurbished. Refurbishing is not an easy. So how do you get, when you scale so fast, how do you manage that? Because that's nuts and bolts.
Yeah.
And then managing all the cash flows after that.
Even today, I stand here and think that it's almost a miracle that everything works, right? I could be here and everything is still working. Somehow it blows my mind. But yes, I mean, I learned it from my experience, right? We bought the first 5-6 assets. We realized one of the big components of our value add strategy. So what our strategy is, we buy affordable housing. I mean, it's not really technically affordable housing, but these are assets in good locations. Your average rent is about $1,000 a month, and you're, you know, basically changing the flooring, granite countertops, changing the lighting fixtures, making it look pretty. And in return for that, you're charging $100 to $200 higher rent, depending on the market. That's how easy the business is described. When I bought my first few assets, I realized that big component of this strategy is, you know, renovating these apartments, making sure your supply is there, making sure your labor shows up. Because for me as an owner, the amount of down days a unit has impacts my cash flows right away. So my job is to minimize the amount of days a unit stays vacant, right? And how do I do that? Making sure that the unit is in ready or leasable condition. Because the good thing about our business is there's never really lack of demand. Everyone needs a house, or everyone needs a roof under their head. There's a huge demand, there's a huge shortage of housing in America. We all know about that. So demand is really never a problem. It's about supply. It's making sure the unit is in ready, renovated condition. And to do that, you know, I was hiring a lot of third-party contractors, and I realized that the timing is so difficult, it's very difficult to manage. Again, goes back to scalability. I hired 4 people to start rehabbing this 2 apartment complex I had at that time. That team grew from 4 to 150 now. So it's about keep adding them. And a lot of times you won't have the time to interview or meet these people who are growing this different division of your business. You have to take that leap of faith. You have to make sure, or you have to believe that the leader or the person in charge of that team is able to execute the task you've entrusted him or her to do. And look, to be honest, I have been wrong many times too. A lot of times I've hired people thinking that, well, this person can lead the student housing division for me. and it hasn't worked out, right? But this is the pros and cons. This is the con. You just don't have a lot of time. You go with gut. I work a lot with gut. So a lot of times you're not really right. You think, you want to believe you're right, and you will keep telling your mind that, no, you're right, this person is going to work out. But really to figure out that no, and calling your own, what you decided was wrong, that's the key. That's what I start learning now. Initially, I wouldn't admit my mistake. I wouldn't admit I was wrong. I'll keep carrying it on. Now I've learned to admit that. I make sure that this was a wrong move. Now changing that error into a better decision, that's when defines how successful you are.